na Absa wamejicommit kupanda over 100,000 trees, of which leo ndio tumefanya launching, tumeanza na 3,000. Na tutaendelea in the next 2 or 3 months to reach the target of over 100,000+.
Sisi kama Absa, mbali na biashara yetu ya kibenki, pia tunaangalia tutashirikiana na jamii kivipi kwa njia mbalimbali, na mambo ya environment ni mojawapo ya hizo areas where we participate with the community.
The reason why we came here as Absa today is because as an institution we've got a lot of things that we do primarily within the provision of financial services to people, but we also have to be responsible for our communities and ensuring that our communities are developing holistically.
Nataka niseme shukrani sana. Hiyo kazi umetuletea leo ya kutupatia kompyuta hapa. Hiyo ni kusema kwamba hii dunia tunaenda si dunia ya zamani.
Absa is the way to go, and you have also seen that the community has embraced Absa as a bank.
We came here to spend some time with the kids and plant trees with them as part of our commitment to be a force for good. We've been inspired by the work the teachers do. They're committed, they're really dedicated, and they're really nurturing the future. And it actually was such a good reminder to us on the importance of us investing in the future.
We are looking forward to work together with Absa Bank as a school, engage our parents, also to take part in the initiative, also to do banking with Absa Bank.
Appreciate very much because of the nation of the food stuff, cleaning and supply items. We are very much grateful because of them stretching their hands towards this family. What I would just say is that may God bless Absa Bank and the Absa people, and may He extend the territories of the families involved in Absa.
My name is Peter Karoki, the director of Wood Creek School, an international school that has been here for the last 5.5 years. We are people who like to be disciplined, and we know where discipline emanates from. Also, there are some parents who want their children to concentrate. You know, a lot of parents, they are traveling out. They want someone to help them. One of the biggest challenges that we faced as a school is, of course, setting up the infrastructure. So we went to Absa and we told them this is our plan. We've been able to acquire the land, the 4 acres. We have 2 hostel blocks that can house 198. For a bank to come in, they have first to see the viability of a business. They have to see the equity investments of the ownership. They have to see the future. We were able to have Absa assist us. They've given us 3 tranches of loans, almost equal to 700 million. The biggest product that we get is the business expansion loan. The loan is to help us expand the facilities. They've helped our employees have personal loans that help them in their own growth. The relationship manager is very easy to get in touch with, and we feel that Absa is a real partner in our business. I would advise anyone who wants to grow to work with Absa because they help you get things done.
We see you're great. Now let's elevate it with Absa Business Banking. Speak to us about how we can help you get it done. That's Africanacity. That's Absa.
My name is Wambui Mugonjogu, one of the director at Waterline Hardware and Tools. Challenge ya kurun hardware as a young person ilikuwa ku get customer I believe in me. The location Kitengela because it's a fast growing town. Tunataka ukiingia uone aya wako na kila kitu. Hiyo ku get kila kitu kuna point ilifika tukaona we need finances ku stock hiyo duka. Na that's when a friend akatuambia by the way Absa hupatiana secured loan. Hapo ndipo tukaenda Absa. We told them the plan we had for our business na kitu ya kwanza wakatupatia overdraft. We were able to expand the shop. Kitu inanibamba na Absa Bank ni niko na relationship manager. So nikiwa na any issue with my account, she'll assist me directly. The moment Absa uko na relationship manager, anything new that suits you watakuletea.
Can I use my card?
You can. So right now we are doing the tap and pay. I was introduced to MobiTap by my RM. Unapata ni app kwa my phone that customers can just tap, bora simu iko na NFC, and the transaction goes through. I'd recommend Absa MobiTap Pay. One, it's easier to use. I don't need to work with a normal phone and my PDQ machine. Kitu ingine, it's cheaper to me and it's faster to the customer. Na pia at the end of the day, anything that was transacted, debited or credited, napata hapo. I have a dream. My dream is to venture into the real estate market. I want to build houses, sell them, and also want to become a direct importer and direct distributor of hardware materials across East Africa. Whatever spaces you feel you can't fit in, whatever roles you feel you can't play, whatever businesses you feel you can do it. You just need someone who believes in you and you'll do it.
We see you're great. Now let's elevate it with Absa Business Banking. Speak to us about how we can help you get it done. That's Africanacity. That's Absa.
How lucky we are to call this beautiful continent home. Yes, this paradise is not without peril, but just look at what we have to work with. In the years to come, this responsibility will fall to you, and all its potential will be your possibility. So we promise to do all we can today to share all our knowledge and skills, to ensure you inherit a just society, to give you access to the finance and resources you need to build the best Africa possible. But none of that will matter if we don't protect this beautiful continent we call home. And so we pledge to use every ounce of our creativity, our ingenuity, our tenacity, all 37,000 of us, shoulder to shoulder with millions of you, to bring the most important possibility of our time to life. So your world, dear tomorrow, is shaped by the power of zero.
and I'm the first Kenyan to win a Wimbledon Grand Slam. My sister Rosie and I are tennis players. But tumetoka mbali, we were orphaned tukiwa wadogo, and our life became such a struggle.
To forget our challenges, our uncle took us to the tennis court. Hapo, all our worries went away. The sport became our inspiration, our escape, and we were determined to keep practicing and pushing our game.
Until one day, we made it to the top of international tennis. Kama sisi tuliweza, there is no reason you can't too.
Against all odds, Angela and Rosie found a way to bring their dreams to life and became international tennis stars. We believe you can also do the impossible. That's what we call Africanacity. Whatever your goals, join Absa today, and together we can get things done.
Kabla mtupe standing ovation, kabla kupata mamedal, na kabla kuvunja marekod. Story kila champion huanza na challenges. But hizi struggle watu wangu, ziwezi kutushinda. Because the winning spirit that you and I possess cannot be defeated. We may fall, but we pick ourselves up. Live by the code that it can all be done. That's why no matter where you come from, you can claim your place in history. Hii ndo siri ya mabingwa. Story Africanacity.
We believe you can also do the impossible. That's what we call Africanacity. Whatever your goals, join Absa today, and together we can get things done.
Kabla mtupe standing ovation, kabla kupata mamedal, na kabla kuvunja marekod. Story kila champion huanza na challenges. But hizi struggle watu wangu ziwezi kutushinda. Because the winning spirit that you and I possess cannot be defeated. We may fall, but we pick ourselves up. Live by the code that it can all be done. That's why no matter where you come from, you can claim your place in history. Hii ndo siri ya mabingwa. Story Africanacity.
We believe you can also do the impossible. That's what we call Africanacity. Whatever your goals, join Absa today, and together we can get things done.
A very good morning once again, ladies and gentlemen. I hope that you've had a chance to grab some breakfast. Karibuni sana. This is the half-year briefing for Absa Bank Kenya PLC. I think for avoidance of doubt, today we are talking about our financial performance for the period between January 1st and June 30th, and we'd like to try as much as we can to keep our conversations focused within that period. Obviously, it's a pit stop, and so we don't mind at all giving you a sense of what we think when we look ahead. We're joined in this room by a mix of investment analysts as well as members of the media. All of you are welcome. Feel very welcome. We are also joined online by a set of audience on some of our social media channels. And for those who are joining us online, we welcome you to connect with us, leave us comments, engage with us, and we'll be coming to you once in a while. I think just before we start, I'd like us to just take a quick moment to acknowledge and remember one of our departed colleagues in the industry. A lot of you would know him, our friend George Bodo. I think we all know in the analyst community, George was a respected colleague who did his work with great distinction. For my colleagues in the media, all the way from my days until now, George has remained the ever knowledgeable, ever insightful, and most importantly, always available source. We will all dearly miss him, and I'd like to invite us all, if you don't mind, to join us in standing and just observing one moment of silence in respect of George. Thank you very much. You may take your seats, and it is our prayer that may God rest George's soul in eternal peace. Thank you. Now moving on with the program of the day. Once again, feel welcome to this half-year investor briefing. We will be quick and concise, straight to the point. But before we start, I'd like to say we are obviously joined here today by members of our country management committee. This is the leadership team that steers the organization that is Absa Bank, and I'd like to invite all the ones that are not speakers for this session so that we can just give a quick mention to you, and the ladies and gentlemen in the room can recognize you. So please, please stand up if you don't mind. All right, I'll do a quick introduction starting from right here. This is Christine Mwai. Christine Mwai is our country credit director. Next to Christine is Mumbi Kahindo, who is our People and Culture Director. At the front here, we've got Ruth Kamengere. Ruth is our Chief Operating Officer. And we've got Elizabeth Wasuna, who is our Business Banking Director. Behind Elizabeth, we have Ken Kanyarati, is our Legal and Compliance Director. Then we've got Mr. James Agin, who is our Corporate and Investment Banking Director. And we've got Shera Waithaka, who some of you might want to engage later. Shera Waithaka is our Chief Risk Officer. And we've got Tony Mulisa, who is our Regional Treasurer. And we've got Peter Mutua. Peter Mutua is our Customer Network Director. And then we have Stella Mambo, who is our Markets Director. Please take your seats. Thank you. All right, so the program, as I said, is quite straightforward. We'll have a number of presentations, started off by our Managing Director, Mr. Abdi Mohammed. Please do not take to heart that I called you Ahmed here on this podium. Mr. Abdi Mohammed, this is actually Abdi's first investor briefing since he took office, and we're looking forward to a good engagement with him. We've got our Chief Finance Officer, Mr. Yusuf Omari, who you're very well aware of and who you've interacted with over and over again. Yusuf will be presenting to us the financials, and he can take some of the harder questions. And then we've got Moses Muthui, who is our Chief Strategy Officer, and the man who will spend some time maybe giving us a sense of where the bank is heading. So without further ado, I think I'll pause there and invite Abdi to the podium so you can take the program forward. Karibu, Abdi.
Thank you.
Thank you very much. Good morning, everybody. Our investment analysts, members of the media, shareholders, other partners that are dialed in this morning. Hamjambo. Thank you for joining us quite early and chilly this morning, and finding time to join us as we go through this program. The key objective, as we have said, is really to share the H1 results of the company. We'll go into a bit of detail, both in terms of the macro environment in which those results are being delivered, as well as internally the drivers within the organization for those results. Secondly, we'll spend a bit of time, and it's really just a checkpoint, as Charles was saying earlier, to share this overall strategic journey, the direction of travel, what we have achieved so far in delivering the overall strategic plan, and really give you a view of how that looks like as we move into the next phase of our strategy. So those are the two main objectives, and it will be a trio of Moses, myself, and Yusuf, our finance director, taking us through that. We've introduced and recognized our EXCO, or country management committee members, who are here with us today. The hard questions can go to those tables. You saw them as they were introduced. But before I do that, as Charles said, this is my first one back home in Kenya. And you know, since I joined a few months ago, I've been involved in quite a bit of understanding the Kenya business. I can say I have been in touch with the heart of the organization. You know, the colleagues who run this company across the country, our customers, our communities, and all the stakeholders out there that Absa deals with. I've spent a lot of time both in Nairobi and out of Nairobi engaging with those stakeholders. And if I can start with our staff, the team of Absa, as of now, and I'm about 100 and few days into the job, I have met every single colleague that works for this bank in every part of the country. So we've done events, we've sat with them, we've discussed how we can take the client journey forward together. And it has been a very, very informative process for myself and for the country management team. We've also met customers in many different locations, you know, in Mombasa, Kisumu, Eldoret, Nakuru, Nyeri. I think just last weekend we were in Mount Kenya region. And really getting in touch with the entrepreneurs and the businessmen and the people of this country who through every cycle continue to be innovative, to be resilient, and to drive this economy forward. And it was really good to get back in touch with that part of the business. We've also spent time with communities, and you will see in some of the slides what we have done in different parts of the country. And therefore that element of the heart of the organization is something that has really been dear to me during this time that I've been here. The other aspect that I've spent time on is really the strategy of the organization, re-anchoring it, understanding where we've come from, and as you might know, we just came to the end of a 5-year strategic cycle in December of 2022 and have been going through the motions of ensuring that the next phase, the next 5-year horizon, is well anchored, and we have a clear strategy on which we'll execute during this period of time. And that has been fully agreed with the board. We are executing year 1 of that new 5-year horizon, and the half-year results we are sharing here is the first half year of that strategic horizon. So let me then perhaps quickly go into the slides and just take you through very quickly a couple of the thoughts before I introduce Yusuf to come in. First of all, I'd like to take you through our purpose, and it links back to what I was saying earlier about the engagements we've had with colleagues, stakeholders, and communities. We all know about the concept of the purpose-led organization. You know, it's something that in this era of sustainability, where you're looking at results not just from a short-term perspective of today, next year, next month, but you're looking at sustainable results over the long term. the concept of the purpose-led organization has gained a lot of currency. And in Absa, we've spent the last 7 or 8 months in our group looking internally, introspecting, and thinking about what do we mean to the market, who are we, what do we represent, and what is our purpose. And we've come up through a long process of engagement with a purpose statement that we're really proud of and that really explains who we are and anchors the strategy that we are going to be running. And that purpose is empowering Africa's tomorrow together, one story at a time. So it speaks to empowering, helping economies grow, helping customers grow and achieve their ambitions. It speaks to Africa, the continent in which we do business, a continent that represents Absa. You know, we are present in many countries in the continent. We are in touch with the heartbeat of Africa. And that's something that's very dear to us. It speaks to tomorrow, which is about hope and optimism. And it speaks to the stories of our customers. As I've traveled, as I've met our customers, the entrepreneurial spirit in our country and the resilience is something that inspires us. And as Absa, we would like to work with our customers through those journeys. So this is the purpose that anchors. We talk about together. Together is about teamwork, both internally within the organization, but also partnership. And you will see the concept of partnership as we talk through the strategic journey of the organization. And lastly, Africa is nothing without storytelling. We live on stories. We get inspired by stories. And therefore, one story at a time is about that segment of one, the unique approach to each of our customers, understanding their requirements at a unique single customer level, and saying, how do we enable that story? So that's the purpose that is going to anchor many of the things we do. And the beauty of having a purpose of this nature is that it goes with you through the cycles. It informs the decisions that you make as a business during the good times and during the not so good times. It is a North Star that guides the organization. So if I can just flip through a few slides that show what we have been up to, and then speaking also to the purpose, you know, a few images there from the trips that we have been on, engaging both the communities, the customers, and the stakeholders. That picture on the left is a place called Chani Primary School. I still remember that visit. Excellent work that we did there, digitizing the school and helping the students there. We've impacted many schools during this initiative. 50,000 students have benefited so far. Some great work there on environment as well, which is another core pillar in our sustainability journey. And we've been working with government both at a county level as well as the central government level to see how we can help and how we can partner, not just commercially, but also partner with them on their own sustainability agenda. So that's one aspect that I wanted to share. As we move to the next slide there, you will see some of the other initiatives that we've been working on with the SME community. This country, like many other countries in Africa, is driven by the SME and small business community. We've been out there looking at what are their needs, understanding those needs, and delivering solutions to that client base. And we've been out and about, with women businesses, women-led businesses, where we have specific initiatives. We're looking at building capability. It's not just about lending and putting balance sheet out to these clients, but it's also about capability, about training, and about partnering with them and helping them grow their business. So you will see as we look forward into our strategic agenda, this is another important area that we'll be looking at. Another key area that has driven our purpose is around innovation and digitization, and really looking at how we can invest, partner, and work with other entities businesses to use their phones at the expense of investing in these point of sale gadgets, use their phones to do business and allow a far bigger reach for our merchant business than we currently have. And we're seeing a lot of traction there. Buy now, pay later, another new one, and a market first, and a few other initiatives that show our journey of digitization continues to drive the overall strategy. I think moving forward to the next slides, we also have a lot of initiatives that we have done internally. The people and culture piece that Mombi leads for us is very, very critical in ensuring that as we deliver to our customers, as we set our strategy to go forward, we are also looking internally and at what we are doing from a talent perspective in terms of attracting, retaining, addressing issues of diversity, issues of training, capability building, and so on and so forth. So this is another area that we've spent a lot of time on. If we can move to the next one. Now, between the forward-looking strategic agenda and where we are today sits the short-term strategy and the short-term agenda that we have to deliver, which is the 2023 performance, half one of which we are here to talk about today. And as we focus on 2023, we've looked at three main areas. First is about momentum. The bank has a very strong momentum on revenue, on balance sheet, on customer growth. We've shown over the last 1 to 2 years very good traction, sustainable traction. How do we ensure that is maintained and that it is delivered on a consistent basis? And as you will see from the numbers we are about to share, that agenda is very well on course in terms of ensuring we continue to deliver on our momentum. The second area that we're looking at is how to manage prudently in a dynamic environment. Again, all of us, investment analysts, media people, bankers, know that the current cycle and the current environment that we are experiencing, both globally, regionally, locally in our country, is challenging and presents a need for great prudence and good risk management, so that as we grow the organization, we are growing sustainably and in a way that protects all the stakeholders. So this is another area that we've spent a lot of time on. And it's not just about looking at Absa and how can Absa protect itself and be prudent, but it's also about the customers that we do business with. How do we support them through this period? And how do we become a partner that advises our customers through this period? So this prudence pillar is quite critical. And then lastly, we have the transformation pillar. Preparing the organization for that next phase, continuing to invest in the various pillars that we need to have in place as we drive into the next phase of the strategic cycle. Let me now maybe go into a couple of slides that break this down. I think momentum, what we are showing there, is strong over this past strategic cycle, CAGR of 9%. And what you see on the extreme right there is the comparison between H1 of 2022 and the H1 numbers we are here to share today, which shows that momentum is being sustained and actually slightly accelerated. The good thing about this revenue number, and Yusuf will share later on, is it's a diversified revenue number. It is a stable revenue number that comes from different aspects of the business with minimal risk in terms of concentration and so on. And I think the core drivers of this revenue performance, number one, is really our core businesses. You know, we are known as a strong corporate and investment bank in this market. That has continued to pump, you know, reliably. We are also known as a strong retail and business banking entity, and we've seen a broad-based growth across those businesses that we have. But we are also seeing the contribution from new business lines, such as bank assurance, such as Timiza, the micro-lending product, and a few other areas growing much faster than the rest of the bank and delivering, you know, very strongly in that sense. And we'll go into the detail there with Yusuf later on. I think still on the subject of momentum as we move forward, we have the question of the brand numbers. And as you know, the Absa brand is quite new in the market, just about 3 or 4 years old. But we've been tracking in terms of brand recognition, brand awareness across the market. And you can see coming from the mid-50s there, all the way into 90% plus in terms of brand awareness. Thanks to a lot of the strategic initiatives that we have launched and delivered for our customers, because at the end of the day, brands are not just about the colors and the names. Brands are about delivery on the promises that we make to the market. And secondly, involvement in a lot of stakeholder initiatives. We've captured some of the sporting initiatives that we have participated in. You know, the golf, Magical Kenya, big property that we have used to drive the brand forward. Kano Classic, and a lot of other national athletics events that we've been involved in. Really stamping Kenya's athletic prowess, and proud to be associated with it and to be part of it. I was watching some of the events in Budapest this past week and was very happy to see Kenya come in at 5th, top 5 in the medals, with leading Africa, you know, number 1 in Africa, number 5 globally. And I saw they normally count the gold medal, and that's what they use. But I counted the total medals, and I placed Kenya as number 3 on the basis of the total medals that we got there. And we are really, really proud to be associated with sport in general in our country, in addition to the many other community initiatives that we work on. I think if we can quickly proceed, I would like to go to the slide that provides our forward-looking picture. There's a few good slides in there. We'll provide the information, especially with regards to sustainability and some of the work that we are doing here. I think earlier on I spoke about the macro environment that we are operating in. There are some very good, you know, tailwinds there, things that support our ability to grow the business. The Kenya GDP is still growing north of the sub-Saharan average. We see inflation which has been slightly above the target range, coming down consistently, driven largely by agricultural productivity and some other initiatives in the economy. So there are a few good sectors in the economy that are doing very well. Tourism is on a big rebound. We're seeing good inflows from diaspora, and quite a number of areas that are showing strength. But as we know, there are areas of challenge in the global and regional and local economy, and we've listed some of them there. I think our overall approach to this is the global economy goes through its cycles. We've worked with our customers through these cycles over many years, and we believe that we have what it takes as an organization to weather the cycle together. I think I'll spend a few minutes on one last slide, which speaks to the key pillars of our strategy as we look forward. And Moses will do some more justice to this later on. But I think I wanted to put this in front of you. Number one, we are looking at a far more scaled up business than the one that we've had. So in the retail space, when you look at the Kenyan demographics, mean age of 20 years old, lots of digitization, great adoption from the population with regards to digitization, an entrepreneurship class that is coming up quite strongly. We want to be the bank for that future customer, and we want to build it now. And so you will see a significant amount of work repurposing our retail bank, which is already strong, and taking it to a world-class standard through investments in digitization and a number of other initiatives. So scale is going to be important. Reach is going to be important. Not just physical footprint, but also digital agency and a big mix, a good mix of retail distribution approaches that take us into the market in a stronger way. We're also looking at the SME market. It's an area that we've done quite well. Elizabeth and her team have worked on quite a bit over the last 2 years. We believe we have a core capability to serve this market. And a big part of the scale-up that we are looking at is going to be in this segment. In the CIB, corporate and investment business, we have a strong bank nationally, locally, but many of our customers are regional and have regional footprints. And therefore, using the capability that we have in Kenya, we want to build a strong regional CIB business, and we've started doing that already. I've spoken about digital and being a leader in that space. Again, it's about investing internally within Absa, but also it's about partnership. There is a very strong fintech community in Kenya. We'll be launching open APIs, and we'll be looking at how we partner with these fintechs. Again, going back to that together, because no organization is big enough to do everything on its own. So you'll see a lot of partnership, a lot of open architecture that works with the market in a collaborative way. So this digital leader is a big part of the strategy going forward. We've talked about the brand, a lot of great work going on there. And lastly, it's about the employer of choice. We have a strong, capable team across this country. It's about attracting more talent. It's about building diversity. And it's about using our group strengths, the fact that we have training and capability building across more countries than most competitors, to use that to drive our employee proposition. And we continue to test that, and some of the scores that we have achieved are quite significant. So, ladies and gentlemen, I will pause there before I call in Yusuf, really just to summarize. Very strong momentum, great capability already in place, a strong foundation to build on, and I have touched it. I have, been down on the ground, and really a credible strategic journey ahead that has the support of the board, that has the support of stakeholders, that is going to ensure that the results we are presenting here today are going to be sustainable into the medium term, into the long term. So I'll stop there and invite our finance director, Mr. Yusuf Omari, to come and share the numbers. He's the one who does all the hard work. Karibu sana.
Good morning, ladies and gentlemen. Good morning.
Good morning.
You guys are looking sad. I thought the sun has come out. We were here very early in the morning. I think it was around 6:45, but I believe now it's a bit warm. I think just to tie to what my boss has said, Abdi immediately came into the business. We did a lot of tour around the country, visiting quite a number of counties, and as is mentioned, with the entire EXCO, meeting our colleagues and meeting customers. And the last one actually happened last week when I was actually on leave myself. So on Sunday, 11:30 in the morning, I see a very long email from Abdi. And he's saying this email is about areas of improvement. And he had like 2 pages. So I was like, there are kudos, but then the areas of improvement are more. And he just tells you the passion that Abdi has for the business. Abdi, welcome again to Absa. Ladies and gentlemen, I'll cover the financial performance in brief. We can dive into the details later on during Q&A. And then, of course, Moses will bring in the element of strategy, the key priorities, before we open it up to Q&A. I start off with the balance sheet, which I look on the side of assets and the side of deposits. You see double-digit growth rates on both sides of the balance sheet, 22% growth in loans and advances, and I must say double-digit growth rates for all the businesses, be it our retail business, our business banking area, or even the corporate business. Within those numbers, I must say corporate did the highest delta growth year-on-year of about 30%. And in terms of the sectors that are driving this performance, you find it's telcos, it's manufacturing, it's agri, and then energy in that order. From a product perspective, trade is in there. We have the mortgage business supporting affordable housing scheme, as what Abdi mentioned in terms of partnership. And in there also we have the retail, especially on the side of scheme lending, that is forming the numbers that you have there. We have seen from a macro perspective, the rates in the industry has picked up. Within these financials, you'll see that our yields have actually picked up by about 2.5% from a lending perspective, with an average lending rate of about 13%. Which then, of course, when we move into the revenue side, you'll be able to see the impact of that. In terms of just a proportion, nearly 2/3 of these assets is in local currency, so an exposure on the side of foreign currency of only 1/3. If I move to deposit, growth of 18%, and in here, again, double-digit growth rates for all the businesses, with, again, corporate leading in terms of the delta on these financials. In terms of the structure of our deposit, over 60% of that structure is what you call transactional accounts, so we're not paying for interest for it. But then when you look at the impact on the cost of fund, it has increased slightly by about 0.5% to bring the cost of funds in these financials at around 3.1. When you look at this, 22% growth on asset, 18% growth on the side of liabilities, you could say there's a funding gap. But remember, being part of a multinational, when it comes to foreign currency exposure, we have other lines. Hence, what you're seeing on this chart. If I move to the next slide, which is on the side of revenue, you see revenue picking up year on year by 31%. What is important is the balance, the diversification that we have on these numbers. You see both on the non-funded revenue line picking up by about 26%, and then on the net interest income line picking up by 33%. When you look in terms of the different businesses, well-diversified revenue streams. On the side of wholesale, about 51%, and then on the side of consumer retail, which is 49%. So well-balanced. I must say, if you look at this chart 5 years ago, you'll find that it was more skewed on the side of consumer, but now really glad that we've been able to balance this, which means depending on the troughs, depending on the cycles that we are in, you'll always find that we'll be able to balance from a total bank perspective. NFI, we have key lines that are contributing to this 26%. FX revenue is in there. Our new revenue streams, subsidiaries like our asset management is also contributing to this. We have our bank assurance business also contributing to that NFI growth as well. And for me, what is more important is when we look at service fee commission lines, also those ones picking up, which speaks to the fact that our customers are doing more transactions with us. So it's not just on the side of balance sheet, but also areas, for example, to do with payments. On the net interest income, that growth of 33% is tied to the balance sheet that I've just covered a while ago, where you see the yields have picked up by about 2.5% on the lending side, and then 0.5% on the cost of funds. So a spread change of about 2% within this reporting period. I think just to mention again, our corporate business in this reporting period having the fastest growth compared to the other, three businesses. Again, picking up on the opportunities, especially when we see issues to do with cash management, the trade products that we have been able now to service our corporate clients. You can be able to see the impact of that in these financials. If I move to the next slide, this is just looking at our efficiency. So our cost picking up year on year by about 15%. You'll talk of a positive jaw of about 16% when you look at revenue 31%, and then cost picking up at 15%. And you see the biggest investment here is really on people, staff. Staff cost picking up by 16% year on year. And this ties to the fact that we are investing on our people, be it in terms of their personal development, retaining talent, but also in terms of rebalancing. The customers who are the staff who are customer facing versus back office, but then in that is informed through the investments that we've done, the automation, which gives us a lever to be able now to invest on FT that is customer facing. The other area there is OPEX. You see OPEX picking up to 3.9 billion, nearly 4 billion. That in Delta is about 12%. Here you find a lot of investment on software coming through here. The investments that we've done on our technology, so depreciation coming in as well. And then areas like, for example, marketing. Also the investments that have been there to make sure that this brand is landed very well, which you saw what Abdi shared in terms of the relevance of the brand picking up. But more important now is on the side of usage, which I must say, even with the tours that we have done, it's becoming quite evident that it's actually impactful. I think what is more important when we look at our costs is more on the cost-to-income ratio. So you see on that graph, our cost-to-income ratio coming down from 42% in 2022 to what we have now at 37%, which is informed, of course, because of the revenue that is picking up, but then also the automation, the alternate channels that we've given our customers also becoming very, very key in driving this cost-to-income ratio. When we look at the volume of transactions that are done outside the branches, this is now above 92%, which means then we're able to drive on that efficiency ratio while giving our customers different channels for them to be able to do their business. If I move then to the next slide, which is on the risk numbers. In there you see our loan loss ratio picking up from the previous period of 2.3% to about 3.3%. In absolute figure, impairment has picked up 74% year on year. It's a simple chart to explain. In there, impairment will always peak when you start looking at IFRS 9 relative to the size of your balance sheet. So if on the side of customer assets, you saw it's picked up year on year by 22%, automatically a portion of the impairment increase will be linked because of that growth in the balance sheet. But more important for us is forward-looking provision. So you see in these numbers, there is nearly $1 billion, 0.8 billion booking of impairment that is tied to forward-looking provisions, i.e. you look at the current macroeconomic environment, high inflation rates, high interest rates. You look at performance on, for example, the side of employment, which sectors are doing well, and through that you make provisions, which if you look at over the cycle, if you go back to 2022, you see a significant jump on our impairment, 9 billion in that year, a loan loss ratio of about 4.3% in that year. Because of COVID, again, we took a forward-looking provision at that time, and you can see now that came down in the following year. So even in this term, we will expect this to come down once we, the macroeconomic environment basically improves. From a gross NPL ratio, you see on the extreme right at 9.2%. If you compare to the industry is about 14.5%. So a good area to be, especially from a prudence perspective, but then making sure that you're lending with the fundamentals of the business being the key driver for that. If I go then to the slide that brings it all together, we've covered revenue. You see 31% growth in revenue. You've seen cost, the one I've covered, of 15%, 16% positive jaws, impairment picking up at 74%. This brings our profit after tax for this reporting period at 32%. Really stellar performance, as Abdi had mentioned. Something that, if you look at our purpose that has just been recently launched, the core pillar there is outperformance. I'm sure when you look at these sets of results, you'll be able to compare that to the industry. And I'll tell you most of the metrics, be it on the side of revenue, our market share has basically picked up. On the side of cost-to-income ratio, with a cost-to-income ratio of 37%, among the best in the industry. The industry at this point in time will be about 43%. And then on the side of return, you see the return in here at around 26%, again among the best in the industry. The core pillar here is outperformance, and it's the fundamental core that is informing our strategy going forward. On the balance sheet, we can be able to see the double-digit growth rates, again way above what you will see from an industry perspective. The next slide is just summarizing the key ratios that I have mentioned. I won't go through this. We've already covered all of these ratios. And to just go to the last slide before I request my colleague Moses to come and wrap it up. This is basically just showing from a capital perspective significant headroom against regulatory limits, both core capital and total capital. And then on the liquidity ratio, also above regulatory limit. And in here, the declaration by the board to approve 0.2 dividend per share, which of course is for interim at the right time. Once we have the audited financials at the end of the year, will basically come now for the final dividend. So, ladies and gentlemen, let me pause here. In conclusion, some very good sets of financials, I must say, outperforming what we are seeing in the industry and putting us in a very good space as we look at the second half to make sure that we close the year in a very good position and really from a balance sheet perspective, which informs nearly 70% of our revenue, an area that is quite impressive for us to be. So let me pause there and request Moses to join. Thank you.
Good morning, everyone. Let me adjust this microphone one last time downwards. You know, since Abdi arrived on this podium, it's been going down a notch. So this is the final notch. You know, they say vertical is the gift you get from your maker. Horizontal is the gift you give yourself. Look, my segment will deal with our strategy, and this is how we intend to create long-term value, long-term sustainable value. And if you recall, as we announced the full year results in Q1 this year, on 29th of March, we shared one page of our strategy. And that was very deliberate because it's around the same time, actually the same day, we were announcing appointment of Abdi as new chief executive. And since then, we spent a lot of time grounding the strategy, getting Abdi's input into it, making sure the strategy is inspired by his experience. And then in May, we went to our AGM, where we disclosed in a lot more detail our strategy. So this is the first time we are going to go a level lower on what we're trying to do in the medium term. But strategy exists in context and within certain assumptions. And there are three assumptions that we've made. The first assumption we've made is we are net positive on Kenya's long-term economic growth, on long-term economic outlook for this country. When you look at sub-Saharan Africa, and you look at the anchors of economic growth on the continent, you truly see Kenya, relatively speaking, being one of the positive stories, sustainably a positive story. There are big economies in Southern Africa. You've got the likes of South Africa, Angola, that are growing, but growing at low single digit, that are fully mature and perhaps fully diversified. When you look at Western Africa, you're seeing mixed fortunes. There is the Anglophone West, Nigeria, Ghana, that are going through cyclical challenges like any economies go through. And then you have Francophone West, the Côte d'Ivoire, that are really, really doing well. So it's a mixed fortune in Western Africa. And that leaves you with Eastern and Central Africa, where you've got economies like Ethiopia, really transforming rapidly. DRC, a big source of growth. But really within the Eastern Central Africa, there's no economy that is relatively positioned, well diversified, fastest growing, with its fair set of challenges like Kenya. And so one of the big assumptions for our medium-term strategy is the positive, net positive on Kenya's economic outlook. And this is important because that informs how we allocate resources. The second assumption we've made is the Kenya financial services market will continue to be one of the most sophisticated and advanced financial services market. Just given across emerging markets what technology has done to this sector. and actually comparing even to East Asia and the Middle East, there's really very few places like Kenya in terms of consumer financial services market. So we are positive, and we think that sophistication will continue for those who are brave enough to invest. So that's the second assumption. The final assumption for us is the management capacity that we think we've created and the resilience in our business over the last 5 to 7 years. If you look at the things Absa has had to deal with, of course, rate caps, everybody dealt with that. Transition program, this was unique to us. For 2 to 3 years, we were fixing and changing the organization. And then there was, of course, COVID. So the last 5 to 6 years, each year has had its unique challenge to us, where we have twice the size of the balance sheet. We have one of the best efficiency ratios, and our returns are at 26%. So we think that bandwidth and that capacity we've created is going to help us manage what will always be tough times ahead. So these three assumptions are important because strategy can only exist within a context. And I thought it's important just to share those assumptions. Obviously, if we are right, our strategy will work. If the assumptions change, our strategy will remain dynamic. But let me just very quickly pick up where Abdi left it in terms of our strategy. The headline for us is to build a business that consistently outperforms the industry through various economic cycles. Through the ups and downs, how do we build a business that consistently outperforms the industry? We aim to do that by building a modern-day consumer financial services. This is the bank for the next generation. We aim to make sure our business bank becomes a true market leader, because SMEs are the oxygen of the Kenyan economy, and any bank has to find its way into the fabric of that economy. And so for us, SME is a big growth opportunity. We aim to ensure our corporate and investment banking business becomes a dominant player across the region. We like to call it internally a powerhouse. There are 4 banks in the region that where Absa operates in East Africa. Connecting those banks to build a truly regional powerhouse in corporate investment banking is our third priority. We will invest in our competitive advantages to ensure we achieve these priorities. The first being digitally powering our business, investing in technology to distinguish ourselves as it relates to customer experience. What we do with our brand, to take our brand to connect it to what people really care about, because people matter. To take this brand to the people and make sure Absa is an omnipresent brand in the hearts and minds of Kenyans. And finally, we cannot do it alone. We have to invest in our people and work with the very best and diverse talent, because in this business it takes talent to win. And we like to say our people are our strength. And so let me just take each of these in just a little bit of slight detail on how we got here and the context behind it. When we think about the consumer banking market, Kenya has 54 million people. 20 years old is the median age. 40 million people accessing financial services. It's a massive opportunity. Absa has got 500,000 people. So we think within that strategic context that retail banking will remain the most attractive revenue pool for those who will invest in digital technologies to go for that opportunity. Our response is going to be growing our retail business, the conventional retail business, which is growing above 20% today, because there's opportunity there. But evolving Timiza, which is today our micro-lending platform, to a standalone mobile-only financial services business. So we begin to speak to this new generation of customers. And our measure of success, as Abdi said, is to have a significantly bigger business than what we have today. It's to expand that business. In business banking, there are 7 million micro and small SMEs in Kenya. About 3 million of those are registered. We have 60,000. Even if we grow that business 10 times, our share of the 7 million is less than 10%. And you go around the country. If you go to Gikomba today, or Kongoya in Mombasa, or Nyamakoroto is a building in Nakuru we visited, and you compare the activity today to only 2 years ago when none of those shops were open, and you see the resilience of the SME sector. Yes, we'll adjust our risk appetite as we go because there are risks, but SME is more than lending. There's transactional opportunity. And so for us, we see a real growth opportunity here. And we are dreaming to be the leader in this space from about number 5 today. And how we become a partner of choice becomes our measure of success on that one. In terms of corporate and investment banking, our thesis here is around what has emerged over the last decade, where we are seeing the multinational and global business case really being challenged. You're seeing multinationals and global companies that operate across multiple continents retreating to the local and local adjacent markets. So more opportunity has emerged around local markets. And so how we invest in ecosystems to help our clients connect in their local markets and bring the power of our region together in CIB is something that we think can give us that real opportunity to be number one. We're not far off. How we become a dominant powerhouse player in CIB or corporate investment banking is our goal there. So how do we think about our priorities? Yep, so there you go. So to deliver these priorities, then there's need to invest. And we have to invest in 3 core capabilities. Digital. You know, in Kenya today, many years ago, when you looked at the technology industry and the financial services industry, these were 2 distinct industries. Over the last 17 years, there have been blurred lines. Today, they are fully converged. If you have a technology platform, you can offer financial services. And so we have to then make sure we're investing in technology much, much more faster. But it's not at the expense of what we call our physical distribution. We do not have a strategy of closing branches. We actually have a strategy of opening more branches and making sure we have an agency network. So you'll see us balancing how we invest in digital for both front, middle office, and back end, but also open new branches and new physical locations for where our customers want us to go. And we think this is the differentiator, is offering customers the choice, making sure you're investing in both areas. If I touch briefly on the brand and this concept of sustainability, where brands today are being asked to do more than delivering commercial value, revenue, to care about what people care most about, which is sustainability. And so pulling together our brand efforts for commercial and force for good initiatives is something we will do much more tightly than we've done before. And Abdi shared great examples of the work we've started there. But this will remain perhaps one of our biggest differentiator. How we make people feel is going to be a competitive advantage. And talent is about diversity and all forms of diversity. The format of work is changing. The workforce is changing. The workplace after COVID is evolving. We have to be dynamic and then build it in a way that attracts those who mirror the people we want to serve. So generational diversity is a big component of this next strategy. So how would the future look like in terms of just quick guidance that might help you begin to think about the shape of the business? Front and center is growth and ensuring our market share is above 10%. Obviously, someone will look at where we are, which is 8-9%, and say is 10% ambitious. But the key word there is above 10%, because there'll be a mix of how we get there. And this is going back to probably where we were about 15 years ago in terms of our market share. Cost to income ratio at 45%, we are at 37%, which means we'll increase our costs. And therefore, the capacity to invest is there in the business. Because we've set a higher target of cost to income ratio, which is kind of bizarre because 6 years ago when we were at 60, we set a below 50 target and we kept setting a lower target. So now we are changing the guidance to a higher target, which says we will be investing in our business, increasing our costs But if those costs come with a 2x in revenue, this can only mean that our cost-to-income ratio will stay one of the best in the industry. Shareholder returns. We are a listed firm. We generate 5% plus cost of capital, which is 20% of ROE. We are 26% today. So we have to protect that position. But as we invest and carry more capital in our balance sheet, we may see returns staying way above that target range, which is what we are guiding. And then finally, before I invite Abdi to come and close for us, is we have to grow without putting excessive risk in the system. We will not grow by taking excessive risk and overtrading. And so we are guiding to continue carrying one of the best NPL ratios and one of the best quality balance sheets, because that does protect your sustainability. And so, ladies and gentlemen, it's really a new horizon that shares ambitious goals, and some that we hope to exceed, and some that we're already above today. So it's about sustaining those ambitions. And I'll be happy to take more during the Q&A session. Allow me to invite Abdi back to close for us, and then we'll go into the next segment. Thank you very much.
Well done. Well done. Thank you. Thank you very much, Moses. Thank you, Yusuf, for completing the overall picture, the overall story. So mine really is just to recap and say that, first of all, we are showing and will continue to show strong momentum and short-term delivery on the numbers. We are building the next horizon from an investment, from a strategy perspective, and transforming the organization so that we are ready for that next wave of the future. We'll continue to be customer-led and customer-centric, and make this organization about the customer, really, and ensure that every solution that we are delivering into the market satisfies a specific customer need, and really be in touch with that. We'll be investing in digitization and partnerships, and there'll be a lot of work in that space. Again, that's something that that's very dear to us as we move forward. And really, as we do all of this within a globally uncertain and dynamic environment, we'll remain prudent, and we'll ensure that we continue to protect value and to protect our stakeholders. So thank you very much. Very pleased with the set of numbers that we have shared today. It demonstrates that our strategy works, that we are executing well, and that we'll continue to do that as we move forward. So let me stop there, and I'll hand back to Charles to take us through the Q&A admin of the next session. Thank you everybody.
Please give the three speakers a better round of applause. Thank you very much, Abdi. Thank you, Yusuf, Moses, for quite an elaborate presentation on our performance for the first half of 2023. We will go into the session that I know has a lot of your interest. This is the Q&A segment, where we spend some time asking whatever kind of clarifications we'd like out of the presentations that have been made this morning. In the usual format, we would like to begin this segment by allowing our colleagues from the media the first chance to go. Thereafter, we'll take just a quick break. You can stretch, and we can have the room dedicated to analysts, and we can go into that much deeper and more engaging conversation. But before we do that, let me one more time just recognize the many people who joined us on our social media channels and who followed through this session. And thank you very much one more time for joining us. We really are encouraged by your support for our organization, and we will continue engaging in many more engagements. For those of you who are following online, we'll bid you goodbye at this point and wish you a fruitful day onwards. Having done that, we've got microphones going around the room. In the usual manner, just put up your hand. You will put a question across to either Moses, Yusuf, or our CEO Abdi. As I said at the beginning, we've got our members of the EXCO in the room, so feel free to feel free to ask us anything that you may please indeed. But as we get to that segment, let me invite on stage the three speakers. If somebody can help us to put up the seats on stage